Hey traders, Jason here from Levitt Brothers. Hope you're well. So I'm going to do an update on my State of the Market series. The market's doing well. It's relatively strong. It's pretty healthy. It's acting well. We've had a lot of great stock picks. When I say a lot, I mean that's an understatement. We've had like dozens and dozens and dozens of charts that have done extremely well. Back in June, we turned bullish because the S&P and the other indexes were dropping to lower lows, and there was a huge number of stocks that were putting in higher lows, acting well, at least on a relative strength basis. And so we turned bullish back then in the mid-June, and we've now had like 2 months of really good trades. Now, there's a big debate out there. Is the bear market still intact? Maybe this is just a bounce within a bear market, or is this the beginning of a bull market? As far as I'm concerned, I don't really care. I don't get paid to make predictions and then sit back and just hope my prediction turned out. I get paid to actually have skin in the game and make money trading. Okay, so right now, let's look at the state of the market. Okay, how are the indexes doing? What is breadth doing? What's the state of things? Let's try and be a little bit objective, and let's not like enter the debate on like, well, is this a bounce from the downtrend or the beginning of an uptrend or all that stuff. I'll leave that to the academics. I'll leave that to the journalists. I'll leave that to the kind of like those armchair quarterbacks who sit in the stands and guess, and then when they're right, they pound their chest and tell everyone how brilliant they are, and then when they're wrong, they just kind of quietly disappear. All right, so let's go through some things here and see what the state of the market is. All right, so here is the S&P 500 going back to last November. Okay, so the market topped over here. You can see it dropped, traded in a wide-ranging rectangle pattern that persisted for about 3 months. Broke down, bounced, got rejected by the bottom of that rectangle. Okay, and then it fell hard in June. Since then, it bounced, traded in a little bit of a falling pattern there, broke out, came down, tested the pattern, and tested the 50-day moving average and the 21-day moving average. Moved up, hesitated at the previous high here, and has moved up ever since then. Okay, so back in June, as I said in the open, right over here, I started turning bullish. The reason why is because as the S&P and all the other indexes were making lower lows, there were a lot of really good stocks that had also fallen, had posted big losses, but they kind of came down in May, moved up a little bit, and then came down in June and moved up. So when the market did, a low here and a low here, I saw dozens of stocks do a low here and then basically match the low and put in a higher low. And so that told me that on the surface, the market was not doing well, but beneath the surface, there were dozens and dozens of good stocks that were forming really good basing patterns and were shaping up. And the tide seemed to be turning. So I turned bullish. We've had a lot of good trades since then. So now going back over the S&P chart here, this move, obviously, really nice. It's lasted about an entire month. Does the market need to rest? Sure, you can make that case. Let me delete some of these things. But what I see here is I see really good constructive action. I see getting above some key moving averages, coming down and testing them. I see pausing here in the area of a previous pause and then breaking out there. Okay, I see the index now way above its 21-day moving average, which is right here, and even further above its 50-day moving average, which is down there. So I see a market that was trending down and seems to be in the beginning stages of trending up. Okay, now whether it could actually trend up from the current level or whether it's going to chop around, we don't know. But to me, this has been strong enough and has lasted long enough that there's a good chance the low is in. Now we could still, we can still drop back here and catch the 50-day moving average down there. We could, that's still possible. We could drop 10% from the current level, but the market has done well enough, has acted well enough. We have breadth is strong enough that I'm thinking that even if the market drops, it's got a good cushion to work with. Internally, it's strong enough that the lows are probably not going to be taken out. Okay, so that's my approach right now, is that the S&P is acting well enough. that the low is probably in place, and it's going to take, from a technical standpoint, it's in place. There's going to need to be a major external event in order for sentiment to change. That external event could be inflation jumps again, goes up to 15%, tensions between Taiwan and China escalate, but absent some sort of major outside event, I think the low is in place based on how well the S&P has acted. All right, now let's look at breadth. All right, so here is the S&P 500 up top, and these three lines that you see are the 10-day, the 20-day, and the 50-day moving average of the NYSE AD line. Okay, so within a downtrend, it's very normal to get the 10-day AD line moving to a high level. Okay, move to a high level there, move to a high level there. It's not uncommon for the 20-day to also reach at a high level. Okay, this is actually a little too high for a bounce within a downtrend. That's normal. The market could bounce 10-15% in a couple of weeks as a bounce within a downtrend, but what's happened recently, I should back up and say, what happens is you get a bounce like this within a downtrend, and so the 10-day moves up, the 20-day moves up, but the 50 never gets above zero. Okay, so here's a bounce here, the 10-day moves up, the 20-day moves up, but the 50 never gets above zero. Okay, so on a short-term basis, 10 days, 20 days, there can be a bounce, but on a 2.5-month basis, it's just a bounce within a downtrend. So the difference now is you have a nice rally here. You have a bounce within a downtrend with the 10-day. You have a bounce with the 20-day. But look at this. The 50 has finally gotten above zero, and it's been able to sustain itself. Okay, so these other bounces, I'm going to delete these things here. These other bounces, like this bounce, was a telltale bounce within a downtrend. This is bounce within a downtrend. But over here, because the 50 was able to get well above zero and sustain itself, that's no longer a bounce within a downtrend, because even when the market's really weak, you could bounce quite a bit for 2 weeks, 3 weeks, maybe 4 weeks, but you're not going to bounce for 2 to 3 months unless there actually is going to be a trend change. And that's the point I'm trying to make here, is that bounces within downtrends are fairly easy. They're common. They easily can go 10, 15, sometimes 20%, but they only last 2 weeks, 3 weeks, 4 weeks. The fact that this bounce has lasted 2 months puts it in a different category. To me, that puts it in a category where it's no longer a bounce within a downtrend. The downtrend has been neutralized, and we have a new, a reversal's in place, and we have to, maybe not a new uptrend yet, but certainly the downtrend is over. Okay, here is the NYSE and NASDAQ AD lines. Very quickly, you can see trend down, 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 get batted back by the 50-day moving average here. But obviously, there's a big change in character there. So the NYSE is the same thing. We have bounces within downtrends. So you can see, like, here's a bounce within a downtrend, bounce within a downtrend, bounce within a downtrend. Same thing here, bounce within a downtrend, bounce within a downtrend, bounce within a downtrend. In all cases, the 50-day moving average rejected the upside progress, and the trend continued lower. This obviously is much more than a bounce within a downtrend. We got way above the 50. It's lasted longer, gone a lot further. Same thing over here. This has lasted longer and gone a lot further. So this tells me we have a trend reversal in place. Okay, couple more AD line charts here. So just as a point of reference, this is the S&P 500 up top. Down below is the NYSE 50-day moving average of the AD line. So the point I want to make here is that when the market was beginning stages of an uptrend here, you can see over here, this is characteristic of an uptrend. You get a lot of high prints. Okay, the black line here is 0 that fully support the uptrend. Then as the uptrend gets mature and starts to lose some internal strength, you get equal prints, maybe not equal, but close to equal prints above and below 0. Okay, so you can see the difference between this looks like a nice uptrend and this looks like a nice uptrend, but beneath the surface, this fully supports it and this does not. Then you have a downtrend here, and you can look over to the right here and you can see lots of prints well, all the prints are below zero, and most of them are even, below minus 100. Okay, so you see the difference between an uptrend being supported and a warning of the uptrend lasting, and then a fully supported downtrend. Now what we have here on the right side is it looks like we have what looks like the beginning of a trend reversal. Okay, so it's just some more evidence that even if we do, or I should say when we do, because the market's not going to just go up and up and up, even if we do when we get some backing and filling here, there's enough strength over here that I feel comfortable that whatever pullback takes place, at some point in time, it's probably going to get bought because the market internally has gathered a lot of strength. Okay, one more really quickly. This is the large cap 80 line, mid cap 80 line, small cap 80 line. I'm just showing you just to show that the market is not being pulled higher by a small number of stocks. There's really good broad participation in lots of in between all the market caps. So the large cap line is at a new high. Mid cap line is essentially matching its high. Small cap 80 line below its highs, but since mid-June, the path, the gains, the progress are all very good. So it doesn't matter, big, small, medium, all market caps are participating. Strength is broad-based. All right, next up. This is the up top here in blue is the S&P 500, and down below is the Russell 3000 3-month high low. Okay, so on any given day, we're going to look at the Russell 3000, how many stocks are making a 3-month high, how many stocks are making a 3-month low, and we're going to look at the difference and we're going to plot it. That's what this is. So at the beginning stages of an uptrend there, we could see that we have lots of prints above zero. Okay, almost no prints below zero. There was a little bit over there, but you can see that is the characteristic of the beginning stage of an uptrend. Then as the uptrend starts to lose strength, as it did there, like over here the price action looks great, but you look beneath the surface and you have prints there. You can just see, when you draw a box around it, you can see like this box sits at a higher level, this box sits at a lower level. Okay, so even though that's not what I want. Even though this and this look very similar, looking below the surface, this fully supports the uptrend, and this warns that the uptrend is probably doesn't have much left. Then we go over to the downtrend, and you can see this. We have barely any prints above zero, lots of prints, down to negative 1,000. So the point here is now we have a new box being formed, and this over here on the right is starting to look a lot like what took place over here. Okay, will it repeat? We don't know, but I would say at the very least, if you're bearish and you're thinking I'm going to short this, just note that we had this box here, which dropped down to here, which dropped down to here, and now we have a new box being drawn at the upper right, which tells me the downtrend is over or close to over. And to me, like, the lows are probably going to hold, and the worst case scenario is some sort of range. Okay, that's what I'm thinking right now. Worst case scenario is we get something like this. Best case scenario is we get upside and backing and filling, and well, we'll see what happens in a couple months if that happens. But when you get a really good breadth reading like this, that tells me the path of least resistance is up. One more chart here with breadth. So up top is the S&P 500, down below is the Russell 3000 stocks above the 50-day moving average. So very simple. Okay, beginning stage of an uptrend, you get a lot of prints above 80%. A lot of prints above 80%. As the market starts to get tired, you have a complete lack of stocks trading above 80%. You still have, you still have good prints, but beneath the surface, instead of 80% or 70%, 75% of stocks being above their 50, now you only have like 60%, 65%. So there's like 10 or 15% less stocks. So even though the market's going up and up and up, beneath the surface, less stocks are participating. Then, in a downtrend, you get much lower prints. So let's move over to the right side here. We've had a nice bounce. We're starting to get prints above 80%. So if we can get steady prints above 80%, like 80, 85% of stocks trading above their 50-day moving average, That's a great sign. That's kind of like achieving escape velocity. It kind of puts the market in the clear, and it tells you that the market's strong, it's healthy, it's moving up. And even if we get some backing and filling, even if there is some selling pressure, there's going to be some pretty good support, and buyers are going to step in. Okay, so bring up my opening slide, and the last indicator I have is just the number of stocks, number of really good charts to trade. Okay, if I look at 1,000 stocks and I pull out all the really good looking charts, if I have a lot of stocks to trade, a lot of charts that look great, then I conclude that the market's doing well. If I don't have very many charts to trade, then I conclude that the market's just not in a great shape right now. Right now, I look at 1,000 charts and I see dozens and dozens, like well over 100 stocks that are like really good, rock solid chart patterns that are tradable, that are acting really well, they're acting healthy, acting strong. And so the combination of all this stuff, the combination of the S&P not only moving up a lot, but like actually lasting a long time, breadth has really improved, lots of great charts to play. The market has reversed its downtrend. I am not going to predict that it's just going to trend up from here. Absolutely would not do that. But I'm starting to think that like worst case scenario is we just move sideways in a range, and best case is we continue to push up. So hope you got something out of this. Good luck. See you next time.